What's up, guys? Welcome to my YouTube channel. My name is Benson. I'm a forex trader. I've been trading for a while now, and it's amazing. It's amazing. It's very interesting. Trading is very interesting, and it has money. So I want to share my strategy with you guys, how I trade. But there are some things you need to understand about the market. So I'm going to talk briefly about market structure. So in a market structure, there are four. Let me call them four. Yeah, four stages you're supposed to know if you want to be a successful forex trader. So these are the first two. Now, what do we call them? This is called a downtrend. A downtrend. This is called an uptrend. As you can see, the market is trending up, meaning it's buying. The market has been buying. Okay. And how do you define a downtrend? The market never moves in a straight line. Never moves in a straight line. So it moves in this structure here, which we call market structure. I will upload a video on market structure, a detailed one. I want to make this video short. So when I open the chart and find that this is what is happening, so what I'm going to be doing, I'm going to be looking for only selling opportunities when the market is in a downtrend. When the market is trending up, meaning it's buying, I'm going to be looking for only buying opportunities. Only buying opportunities. So these are the first two scenarios that you need to understand about the market: a downtrend and an uptrend. Okay. The other thing. Okay. When the market does change direction, so when the market is in a downtrend like this, so let's say the market has been selling for quite a while now, and then it wants to change direction. Now it has reached a demand zone. Let's say this is a demand zone, yeah, a demand zone like that. And now I'm anticipating that the market is going to buy. So how do I know that the market has changed direction? Because once the market has reached a demand zone, it will be unwise for you to be selling here. It will be unwise for you to be selling here because this now this becomes a strong low. This becomes a weak high. Okay. So how does the market change direction? The market changes direction like this. It breaks this structure like that and comes down, retests this demand zone here, and then changes direction. Now it's in an uptrend again. Okay. So now this is the third scenario you need to understand about the market. So how do I know that the market has changed direction? So what gives me that indication is I look at the break of structure, like this area here. This high has been taken out. Once this high is taken out, like that, so anyone who was selling here has been taken out, meaning they did not understand order flow. So once I see that this has happened, I'm going to be looking to buy now. I'm going to be looking for buys, not sales, because this now has become a weak high, a weak high, a weak high. Now the lows become strong, meaning the market has changed direction, meaning the banks are now buying. The smart money are now buying. So if you're a retail trader and you're selling, you're moving against the big money and you cannot be able to do that. So it's wise when you see something like this happen, when you see a break of structure and a retest of this area and a break of structure, now know that the market has changed direction and now it's buying. So how does a sell? Oh, that was a break of structure to the upside. Now a break of structure to the downside. It happens like this. I'm going to show you scenarios on the charts. I have been trading GBPUSD. So we are moving up. The market reaches a supply zone. A supply zone here. And now it wants to change direction because there is a lot of supply here. There's a lot of sellers who are waiting for the market to touch here. The banks were selling here. So what happens? You see that the market will surge downwards with a lot of momentum. With a lot of momentum, and this low is taken out. This low is taken out like that. So once I see this, once I see that the low This one here has been taken out. We call this a break of structure, a BOS, break of structure. Once I see that a break of structure has happened, what I'm going to do now, I'm going to be targeting to place my cells here, because now I know that this is a strong high and these all these lows here are weak, are weak. So I will not be taking I will not be taking buying opportunities now. Now the market has changed. The sentiment has changed. Now we are selling. So what the market normally does, it goes back, it retests this area here, and then it continues now in the downtrend like that. So that's how the market changes direction. So it's good that once you sorry, once you open your charts, it's good that you understand what is the market, what is the state the market is in each and every moment. I'm going to show you on live charts. This is GBPUSD. I've been trading GBPUSD, and I'm going to show you what I was talking about the market structure. So so what happened here is that GBPUSD reached a supply zone here. I'm going to record a video about what is a supply zone. How do you know that the market has reached a supply zone? So once the market has reached a supply zone, what happened is we see a break of structure here. We see this break of structure because our last lower high. This one here was our last lower high, like that, which is taken out by this low here, taken out like that. And when that high has been taken out, now I'll be alarmed. I'll know that I'm not supposed to be looking for sales anymore. Though there might be some selling opportunities, but it's good when you're on the other side of the market. The place the trade that you place is going to be a high probability one, meaning the chances of losing are low. Okay, so it's good to be on the right side of the market. So once I see this break of structure, what happens is that now I'm going to place my buys at this area. Yeah. So what does the market do? It comes back, retest this supply zone, supply zone here, and continues trending upwards. Now the market is doing what? Is buying. Is buying. It has changed now direction. It has been selling like this. Now it has changed direction. So now from now I'll be looking for buying opportunities. Buying opportunities. So you're going to look for order blocks in the right direction of the market. Okay. So here we see a break of structure. As I was talking about that break of structure there. And now we are trending upwards. And as I said, the market does not move in a straight line. So you will see now these pullbacks here, these pullbacks, these ones like that, which are never perfect. So the question is, how now do I trade? How do I trade? How do I trade this? How do I trade this uptrend? How do I enter this trend here? Because there are some people who will be able to enter the trend from the low here, and others, like for me, I don't like this. I wait for confirmation that the trend has changed direction. So I'm going to use these pullbacks to enter my trades. These pullbacks, yeah. But not all areas where you see a pullback that are going to hold are going to work. So I look for something that we call manipulation manipulation. I look for manipulation because these markets are manipulated by banks, because banks don't want you to make money. Banks are the one that are moving this market. They move this market. So if I enter here, the banks know that I'm buying from this area, and they know they are targeting this area. So from this entry here all the way up, it's quite a good amount of money. So what the banks are going to do, they're going to manipulate this area here, sell. They're going to manipulate this area here so that they can sell, they sell, they act in the, what do I say? They take a trade in the opposite direction. They act against themselves. So they're going to, even though they are buying, even though they want to, the intention is to go up, they're going to push price down first, like this, with this candle, with this wick here. So anyone who was buying here has been taken out. So what this candle has done, this candle has done something we call manipulation. It has taken people out. It has grabbed liquidity, grabbing liquidity, liquidity grab, liquidity grab, liquidity grab. So here there's liquidity. If you don't understand liquidity, kindly please go and in terms of the forex market, it's good that you understand liquidity, because liquidity is everything. When I was starting to trade, I used to buy at these lows here, and then I come back and I find that, oh my, I have been taken out. I have lost my money, and I was like, why did I lose my money? Until I came to realize that the banks are the ones who manipulate this market. So what I do is that once I see such an activity, once I see this week here, I can guarantee you guys that something has happened here, and this is what I've been interested in. This manipulation, this week, this candle has done something. And now what has happened is that a brief explanation is that at this area here, at this high here, the banks realize that on the downside there is a lot of liquidity, and the liquidity are the stop losses. So what they do, they're going to sell from this point here up to this point here. And when they sell, they take out, or they swallow the money here. They swallow the money. And once they swallow that money, it gives them the momentum to move up, to move in the intended direction. But it means that once the banks sold here, and then the market was moving in the upward direction, it means that the markets are in a negative position here. It means that the banks are in a negative position, meaning here they made some losses. They pushed the market down so that they can get the momentum to move up, so that they can take out liquidity. Meaning here the banks are, I don't know how to place to state to explain to you about that, but I hope that you understand what I mean. So something is going to happen once price comes back to this area, and once price comes back to this area, what is going to happen, that it's going to change direction. It's going to buy again. It's going to buy, which is that this buy that we see here, this buy that we see here. Okay, this buy. So I used to ask myself, why does it happen that everywhere that there is manipulation, once the market comes back to that area, it buys? Why does it buy? Why? Okay, what happens is, as I said, when the bank sold here and yet their intention was to move upward, it means that they left some negative positions here. They left some negative positions here. So what happens when they come back to this area here? They close their positions. They do close their positions. Okay. So when they close their positions, what happens is that the market tends to move up. The market tends to move up. It's called mitigation. They are mitigating this order block here, because here there is an order block. They left an order block. Now they are mitigating this order block. So for me, I was waiting for this area here. I was waiting for this area here, because I knew that once market came back to this area, it was going to buy, and I was in this buy here. Okay, so guys, you can take an advantage of this candle. This is a very good strategy that I've been using, and it does not fail. I tell you guys, it does not fail. Once you understand how it works, once you combine this with the market structure, once you understand what is market structure, what is the market doing, and you notice such a thing, you notice this. Trust me, guys. It's going to work. It's going to work 100%. So So there's something else that happens here because what is this that is happening here? What is this that is happening here? So what happens is that so the banks know that once they come back to this area, they're going to buy. They're going to buy in this area, or they're going to close their positions. So what are they going to do? They're going to they're going to these guys they're going to we call this inducement. They're going to induce people. They're going to induce retail traders. Inducement. All these terms that I'm using. If you want to understand, if you want to learn this, I have a Telegram channel. You can click on the link below. I'm going to post that link, and you can learn about all this because it's not one strategy, and I cannot be able to explain it in one video. So forgive me if I'm fast, but I just want to explain briefly. So we call this inducement because someone will come and see that oh, here there's a low and it has a lot of momentum. It broke the structure here upwards, going up like this, and someone a retail trader is going to come and buy from this area here. They're going to buy from this area here. And what does the market do? It gets to this area, pretends that it wants to buy. So people, retail traders enter. Once they enter, chap, they are taken out because these people are clever. They know that they want to come back. They want to come to this area here. They know that their target is this candle here. So they're going to induce people to buy early. What is inducement? Inducement is when you want to induce people to do something. So it's like you're attracting them to do something. So you place a trap. This is a trap. And all of this is liquidity. There are so many people who are buying from this area here and they were taken out. They were taken out because they didn't understand that this was inducement. That's how we used to trade before, and almost every area could fail until I came to understand about this candle here and about inducement because this is a confirmation. This is a confirmation for me. Actually, I don't take a trade without if I don't see inducement first. Because inducement is a confirmation that something is going to happen on this area here. So as you can see, that is how I trade on an uptrend. Okay, guys, on an uptrend. This is a very good strategy that I've been using. So it's about this manipulation candle and the inducement. So once I see a manipulation candle and inducement, I'm taking that trade. Okay. There was another trade that I took on this sell side on this area because I saw this. I closed my order. I entered this one, the second touch. I entered this one, and I closed on this high here. I closed on the next high. That's how you take your profits. On the next high, I closed here, and then I noticed something that the market did not have a lot of momentum. It did not change direction. I didn't change direction because for me to know that the market has changed direction, they had to take out this. I wanted I was waiting for the market to take out this. This was a trend line. I wanted the market to go beyond this trend line, which did not happen. So I knew that the market is still in a downtrend. So how did I took a trade on this side here, this area here. So this became my supply zone. So I took this buy here because of that candle. I took this sell here. So how did I know that the market was going to sell here? I was in this sell here, moving down. So how did I know that? Oh, guys, I did not want this video to be so long. So let me just talk about this. Then I'm going to end the video. I hope you guys are learning something. If you want to learn more about trading, you can join my Telegram channel. You can subscribe to my Telegram channel, and we are going to learn and grow together. So how did I trade this area here? So what gave me confidence is that first of all, the trend line was not taken out. The trend line was not taken out, so I knew that the market was still in a downtrend. Then what I saw something here. I saw something here. I saw something here. Let me just explain it. So there is this scenario here, which is that let's say the market is moving up, then it moves down a little bit, tries to take out this high, it fails to take out this high, and then it falls like that to the downside. That is what happened there. And then it comes back. It comes back, induces people to enter early like that, then touches that area, and then it's in the downtrend. That this is exactly what happened. This is exactly what happened. Exclude this, sorry. This is exactly what happened. So as you can see, the market reaches this area, sells for a while, goes back to that area, fails to break. Failure swing. We call that a failure swing. A failure swing. A failure swing. Once you see a failure swing and a break of structure to the downside, failure, failure. How do you write a failure? Okay, I don't know how to write a failure. Oh my god. We call that a failure swing. A failure swing. So the market fails to take out this high, meaning this high is strong. This is an indication for me. So what is the confirmation that this high is a strong high? How do I confirm that this high is a strong high so that I can be able to take this trade? So first of all, it has not been taken out, and then I see a break of structure to the downside, which is this break of structure here. BOS there, a BOS like that, a break of structure to the downside, and then I see an inducement. I see an inducement somewhere. This inducement here, this high, this high here, this high was an inducement. Inducement. I use inducement to confirm my trades, because these people are smart, and you need to be smart like them. So this is what happens: failure swing, then we see inducement, break of structure. So they want to lie to you that this is a high that broke this structure. No, no, this is liquidity. This is a trap. The high that is supposed to be the strong high is this high here, this high here. And once you see once the market touched that area, it literally dropped. It dropped with a lot of momentum. It dropped with a lot of momentum to the downside, a lot of momentum, and you're in this cell. Once you understand how to trade an area like this, so this is a combination of market structure and other strategies which I use. But there's going to be a different video. I'm going to talk about inducement in detail, and manipulation candle. So guys, thank you for watching. Please subscribe to my channel, and God bless.